Hey everybody, it's Rob Keynes of goldsilverpros.com. It is Sunday, August 22nd, 2021, and I have back Steve Mueller, Superfan, and he of the Uranium. We had a uranium podcast about a month or so ago, and he gave us a good overview of the bull market thesis for uranium. And he's back today to talk potential individual investments and with a lot more detailed information on his thesis for uranium. Steve, how are you?
I'm doing really well, thanks. And you had a great Money Metal Summit. It was great to be in person. I appreciate it.
Yeah,
good,
that's a lot of fun.
times.
You came to the after-hour session with us and was up on stage, and I think a lot of questions for you. A lot of people are interested in your opinion, and we had a lot of fun there. So I appreciate you being there.
Yeah, and I thought Michael Sayer needs his own episode or two as well in Yara. Right. They both crushed it.
So. We just got done having lunch here a few minutes ago before he caught his flight, so definitely would be interested in having him on the program as well. It was a good time all around. We had, would you say, about 25 people show up to our conference in person?
Yeah. I think next year we'll probably double that, right?
Yeah, I think we should, and I think we'll do both days in person next year.
That'd be good.
Make it worthwhile for people to come. So yeah, it was good times, and I was surprised that we weren't really going to do a video today because I'm about to hit the road. But you know, you had what you thought was very timely and pertinent information to uranium, so I'm just going to let you kind of dive into it and navigate me around.
Sure. Yeah. So I'll go to 2149 if you don't mind.
All right. So we're going to share some.
This is uranium spot price.
2149. Now we're not going to share all of these, but we'll share quite a few.
Yeah, for sure. So the spot price it always falls off about this time of year. It always typically suffers summer doldrums in August and September before right at the end of the year it picks up because of the term pricing contracts and stuff. And so, you know, with the big money and the Hamptons and gallivanting across the yacht clubs in Europe, there's just not really much business now. So you would expect a drop. The drop I expected. Where we get into the August 15th, where it just all of a sudden skyrockets up, that's the really interesting part that I was very glad to see. And this is why we're making the video. There's a natural resources company called Sprott that probably most of your listeners know from PSLV maybe, or from Rick Rule. And they're kind of the Berkshire Hathaway of commodities, right? Okay. And so they have some physical trusts where they hold platinum, silver, gold at the Royal Canadian Mint, but they also have one for uranium now. And there's never been price discovery really like an at the market facility where we know exactly what the price of uranium is if you want to take delivery within 30 days or at 30 days. You know, it's always been, oh, hey, yeah, if you want it in 90 days. And it's always been a really opaque market, which makes sense with all the national security concerns, but it's not been something that's, it's been highly manipulated, right?
Sure.
And so they wanted to bring, you know, price discovery to it. And I think uranium's about to kind of do what rhodium did a couple decades ago. And it's about to go really high.
So explain,
and I thought,
let's go back to some of your earlier comments. So we talked about summer doldrums. We've had this in gold and silver. You have it a lot of the commodities.
Yeah, we didn't.
When money's not coming in because people they're investing. Like you said, they're on vacation. They pull their money out of the market so that they can go, you know, enjoy time with their family, stuff like that.
Sure. And the big money, you know, well, it seemed last year they were at their desks banging away, trading pretty hard because of the COVID lockdowns. And whether for whatever reason, it seems this year they're able to travel more. And so a lot of people actually are, right? And I think also there's less liquidity in the system at the moment.
Yes, there is.
And so, you know, last year we saw everything going crazy. I mean, there wasn't anything going up last year, right? I mean, everything was going up. But right now there's, you know, the cryptos are going up a little bit. Gold and silver are still going down. But uranium, you know, was going down, but now it's stopped and reversed. And so this is what we call like a fear entry. Like this is, but I do not believe it is a dead cat bounce. And so I don't think you're catching a falling knife here.
So yeah, what's the reason you think we have a spike on the 15th?
Yeah, so the spike on the 15th is when Sprott started buying through their physical trusts.
Okay.
And that very first day, they went and bought 100,000 pounds and said, hey, we want 100,000 pounds. You have to deliver it in 30 days. And then they did the same thing the next day. And then the next day, they bought, I think, twice. And so inside of a week, they bought 900,000 pounds, which is the yearly requirement for 2 power plants. I mean, that's astounding.
Talk about how much that is. Talk about the size of the uranium market for a minute and remind people, because we talked about last time, but it's been a few
Yeah.
weeks. Talk about the size of the
So
market and then how small
the
that market
size of
is.
the market's about 29 billion,
Yeah,
which is, I mean,
that's nothing. That's a drop in the bucket.
that's not even, yeah. I mean, that's smaller than silver. It's a fraction of a lot of the meme cryptocurrencies. I mean, it's a fraction of a lot of the meme stocks like GameStop. I mean, it is tiny, and yet it supplies 20% of baseload power. It's the only green or ESG friendly type of power for baseload power for electricity in the world. It's 10% of baseload globally. So it's one of the most necessary commodities next to food and oil.
Right.
We have to have it or the lights go out. And Sprott just brought price discovery to it, and it's going to go up. And now they've made it to where hedge funds can squeeze it, and I think they will.
So
And I
talk
think it's
about
going to be.
how Sprott
Yeah, go
brought
ahead.
price discovery. Why is that the case?
Yeah, so if you go and buy shares of this uranium trust, which is UU, and some, or on the OTC SRUUF, Sprott Uranium Trust. It's on the Toronto now. It's not New York's. It's not the NYSE listed until probably January, February. Q1, we expect the approval process by the SEC. But as soon as there's enough cash in the account to where it's trading at 1% above its net asset value, so where it's just trading a little above what they actually own, they go and buy more uranium. And so there's immediate price discovery.
Okay.
And it's never happened before, and there's never been anything like it. And it's kind of what we hope happens in PSLV, right? That PSLV eats up the COMEX, and then COMEX goes away, and then we have price discovery in silver, and then hopefully silver can go very, very, very high. So.
Gotcha.
But it's happening now, in my opinion, in uranium. And kind of last year, silver bottomed out at $12 spot, I think, on March 8th, maybe March 9th, somewhere around there. And I mean, I thought, man, I wish somebody had tapped me on the shoulder March 12th or March 13th and said, hey, in a couple months, we're going to be at $27 silver. You need to buy everything you can.
Of course.
So this is me trying to be a friendly neighbor and say, hey, guys, the big boys are still in the Hamptons playing, but you retailers can buy a little bit now. Not that the stock market doesn't crash this week because of whatever reason, but you might take a little small bit now, and I mean, we've never seen the spot market price do like that. They gained 10% in a week.
Yeah,
that's never happened.
Right.
So at least not. Yeah, and now it's at an all-time high of the last, I think, 6 years. So that would kind of be like silver hitting $32, $33, like that would get some attention,
Okay, so talking about, let's encapsulate what we talked about for those who are not as familiar with uranium. Uranium is a very
sure,
but it's so critically important to the world energy supply, without it, all the solar and all the solar and wind power that you could stand up would not compensate for it, and you would have to burn a lot more coal and nuclear, which means trade flows of coal and nuclear would literally have to turn around overnight. And with the cargo ship issue that we have, would that even be possible? So if we lose nuclear power, the world's in trouble.
Blackouts, just constant blackouts. I mean, yeah. Blackouts, brownouts, production, GDP drops. I mean, that's bad.
Okay, so now we have Sprott getting involved. And I think on the last conversation, you and I talked about Sprott wanting to get more involved in this market.
Yeah.
So now they've created what they think is more legitimate price discovery by being a big player coming in. They certainly have deep pockets.
Yeah.
They can make a big splash in a market like this.
Yeah.
And so now what is the investment thesis here? Is it just to play uranium through some sort of index, or to invest in stocks, or what is the direction people should take?
I wouldn't tell people what to do. I would just tell them, hopefully they did some due diligence, because last time I said, hey, this is a market you need to look at, right?
Right.
And I said, hey, right now it's oversold, meaning, or overbought, right? Don't buy now, right? I tried to make that clear, like it's expensive, but like it's gonna pull back, and it did, right? And man, it really pulled back hard. It pulled back more than I thought it would, just because I figured most people could sit for the returns that we're going to get. But I mean, even the best companies like Kazatomprom, and Russia or Kazakhstan, they pulled back, I think 17, 18% from their high when last time we talked.
Yeah.
Some of the other better ones pulled back. Some of the better juniors like Denison or Global Atomic pulled back 30, 35%. Some of the really risky explorers that I don't think are that risky, because there's just not enough of it. They're going to have to pay somebody to find it, kind of like gold and copper and silver, right? Like we don't have enough. We need to get it out of the ground. They pulled back 50%. Like some of them got killed. It was just murdered. There was blood in the streets, and so if you're good with a little vol for another couple months or years, this is a good buy. So you could play it by buying the physical trust, and you're probably going to get probably a 3-bagger, maybe 4 or 5. It depends on how high these hedge funds squeeze it.
Right.
But even with the majors that pay dividends, like Kazatomprom, they paid me a really nice dividend this past year. That was nice, just to sit around on it.
So I've got a bunch of questions. What price does the market need to reach to where companies actually make a lot of money on this? Because isn't uranium underpriced to cost?
Oh my gosh, yeah. So right now it's at 33, right?
Yeah.
They really do need it. I mean, if you consider exploration and cost of capital and all that stuff, they need a mean reversion to 60. But a mean reversion means that you need to go above the average for a little while, right? To incentivize and get people excited. So, do we see 95? Probably. Do we see 100 or 200? It wouldn't surprise me. I've heard people call for that. I talked a little bit about that last time. Not that that's what I'm betting the house on or anything, but man, that's really actually possible. And I don't think that's a sensational claim. We wouldn't need a monetary reset. You know what I mean? We don't have to have $1,000 silver. I would love that, right? But $100 uranium, I mean, that's kind of like a foregone conclusion in my mind.
Yeah, a lot of the bear market on uranium is that they're closing down power plants, but the problem is you can't really, because the amount of power produced by one plant is extremely difficult to replicate and try to meet environmental standards, because what are you going to burn? You're going to burn coal, natural gas, oil, all of those fossil fuels. We know from every study I've seen that solar and wind don't do it. And we saw in Texas what happened. I live in Texas. We saw what happened this past winter when we had deep freeze, and we were reliant more on wind and solar power, and the wind turbines froze, and the solar power wasn't getting sun because it's dark and gloomy. It gets that cold. And then we relied only on natural gas and coal, and we had restricted natural gas and coal flows. And then you had a couple of the wellheads freeze up, and then it was all she wrote. We had massive blackouts everywhere. So it was a cascading effect from the decisions made prior to the weather event, and then the weather event basically pointing out the weaknesses in that system.
Yeah.
Which is that solar and wind can't be your base load. They can be, you can add them in, but you can't necessarily depend on them for peak power, because you don't know when you're getting wind and max solar is going to meet your peak power always. Weather affects that. And so you have to have something that's reliable. It's there every day, provides a lot of power at a reasonable price, that's also environmentally friendly. And critics would say, well, uranium's not environmentally friendly, it's radioactive. And while that's true, it's a hell of a lot more friendly than coal or natural gas or even oil. In the long run, and for the amount of electricity it produces per pound that you're using, right?
Sure. Well, I would even take issue with a lot of those people saying it's not friendly because there's a new way called HALEU, or high assay low enriched uranium. And it's not weapons grade, but it's much more enriched than traditional. And basically they burn it so hot, there's not even actually waste. It all burns up.
Burns up, yeah.
And so I think they've kind of made it to where it's clean, it's safe. There's not a better option. If somebody brings along a better option, I'll support it. But right now, this is the best we have. And yeah, Germany and Texas and all these other places, California and New York, are going to find out that, you know, this is what we need to do.
So
but in the meantime,
you gave me
oh
a
yeah,
lot of images.
2198.
Let's talk about those. Yeah.
Oh, which one?
The images that you gave. So we did go over the price chart. Tell me about some of the other images that you provided.
Yeah, 2198 is a good one.
Okay.
Let's start there.
Let me get that one up and then I'll add it to the screen. So Steve is a master researcher. Just want to let you guys know. So you got a lot of information on this video.
So this is from Canaccord Genuity, and they're one of the 4 experts in the uranium space. There's not too many people that cover it, but they do a good job. And this just says that we don't need Sprott to actually squeeze it. We are in a sustained deficit for the foreseeable future, probably till 2030, but at least till 2024 or 25. Yeah. So we don't have enough pounds to replace the pounds we're using, basically. And we've not been on the right chart says that we have not been spending the money we need to find more uranium to replace the pounds we've been using.
Right.
And some of that was because we had uranium from nuclear weapons being made into nuclear fuel. Great, should have done that. And some of that was from Fukushima and the Japanese pounds those reactors were shut down. And now those have been restarted, and now those pounds are so now the deficits. This was January, and I think their new estimate that's about to come out in September will show an even bigger deficit because Atomprom and Cameco, the 2 big producers right now, the only 2 producers right now, really, have both restricted their forward guidance, meaning, hey, in the next couple of years, we're not going to make as much as we thought we were. So the supply deficit is actually worse than what this chart from January shows. So it didn't need to be squeezed, but the world's biggest commodities financial players about to squeeze it anyway. So I think it's gonna be a pretty violent move to the upside. And luckily the big hedge funds and everybody else is still at the beach with their family. So now's a great time for us retailers to go ahead and be brave and maybe get a little exposure to it. I'm not saying go all in. I'm not all in. I still have a little bit of gold and silver, or a lot of gold and silver, and a lot of crypto and some coal and everything else. So, but you know, this is one of my biggest positions ever because it needs to be invested in, but also because I think it's going to be very rewarding. So
yeah, and I think if people go back to your previous video on you know the general bull market thesis, I think they're going to see that. Okay, so let's get into. Do you want to get into
a spreadsheet for you?
Or?
Well, yeah, we can do that. I made a spreadsheet.
Okay.
I don't know if you can get it to open or not, but
yeah, here we go.
Yeah, so last peak, and this might help some people. And right now there's 60 something companies, 60, 68, 69 companies that you could look at. And I just listed a couple that were around last time. And last time, so right now we're at 28, 29 billion this last weekend in US dollars. Previous peak, we're at a couple $100 billion, depending on how you value private and public and whatever else, right? So, and I'm not gonna, right now, physical uranium, just this last week, it dipped under 30 briefly and then bumped up to 33 because of Sprott. So it went up 10% just in 4 days. And then the previous peak was 138. If you adjust for inflation, it's like 150, 160. And the implied goal that some of these guys are talking about, they're talking about squeezing it to 200, and I don't see anything stopping them. Yeah. And just to go back and look at these companies, you know, what were these companies at when uranium was at 138 last time? Well, Cameco, right now, just this weekend. I pulled in the Sunday's market's closed. It's Sunday. Australia's not opened yet. So I pulled these are today's numbers. Cameco's at 8 billion and change Canadian dollars. They're at 21.
So
So
when was the previous peak, so that people know?
I forget which month. I want to
Mhm.
say it was 2007.
Okay.
I wasn't invested then. I was still studying really, really hard.
Mhm.
So I wasn't around for it, but yeah, I did watch it a little bit.
Okay.
But yeah, and should you pay for an advisor that's in the space that knows it better than I do? Absolutely, you should. But this is just something to be like, hey, take a look at this.
So these companies have all been around since the last peak, is what you're saying.
Yes.
So if you look
Yeah.
at what happened during the last peak,
Right.
there's a lot of upside here. And I think you're also saying that the new peak is going to be much higher than the previous one.
I think so. For some of these companies, I think Cameco will exceed its previous peak. Paladin, I think they've made some stupid decisions since the
Mhm.
last peak, so I don't know they will. If they do, not by much. They let go of one of their best mines and sold it to Lotus, and they sold some of the other stuff to the Chinese. So I don't expect that they will exceed their previous peak by much. Denison, I think they will, by a lot, by a whole lot. That's one of my bigger positions. I like them. I think it's going to do well. So Fission, their management, I think, has been a bit distracted. I think that's a kind way to say it. But they have one of the best deposits in the world, as does NextGen. They're right next door neighbors in the western end of the Athabasca Basin, which is like the Permian Basin for natural gas, or Saudi Arabia for oil. It's in Canada. Deep Yellow, they've got a long ways to go, but they have the best management. That's the management team from Paladin last time. So if you're going to bet on a horse, or if you're going to bet on the jockey instead of the horse, that's the jockey to bet on, right?
Mhm.
UEX, they've got the third biggest land holdings in Canada of any company. So I think they've got a lot of upside. I don't know that they reach their previous peak, but do they even have to? No. I mean, what is that, a 11 bagger, 14 bagger? I don't know. That's a lot. They got a long ways to go, right? I mean, that's a lot of upside still there. Bannerman, I think they're going to crush their previous peak. I'm really excited about what their CEO is doing. They're in Namibia, but that's traded on the Australian exchange. Forces Metals, I think they'll do well. Mega, that team went over to Consolidated Uranium, and that's why I say look at Mega.
Yeah.
Yeah, so I'm not in Mega. We have friends that are, but I'm in Consolidated Uranium, and I think they're going to do pretty well. Encore Energy, they weren't around last time, but their ownership was, and they're saying they want to be an encore to their last act. Last time they started from scratch and they sold their company for 1.8 billion Canadian to
Mhm.
Uranium One, and they want to do it again. And I wouldn't be surprised if they tripled what they did last time. So yeah, a lot of companies other than this, but that was just a couple from last time just to look at. So yeah.
So I'm going to share a screen here in a second on
Sure.
just a general energy commodity chart, not
Oh
specifically,
yeah.
but if you look at what's happened to the energy prices, have gone up, of course. Of course, you
Right.
had the restart of the economy,
Sure.
but that's past previous levels. It's not just the base effect. It's there's more price pressure,
Hmm.
on energy complex, where just the GSCI energy here that we're looking at is 45.95% return.
Yeah.
And I expect energy prices to continue to rise. I think there's more
Yeah.
money sloshing around the system, and I think there's more demand for energy.
Right.
So what's going to happen is, as the rest of these get expensive and uranium is cheap, people are going to start switching to uranium, right?
Yeah,
Um,
it's the cheapest by far.
it's the cheapest in terms of output. And talk about some of the starts that are going on. Companies or countries, sorry, that are starting new reactors.
most all of them. The U.S. is talking about it. Bill Gates and some of those others are replacing coal plants and just pulling out the coal and putting a small modular reactor in up north of us. China and India are furiously building. Africa's looking at it. Japan's are starting. France is looking at doing more. But you know, France's energy costs are so much lower than Germany's because Germany's having to pay for coal and pay for Russian natural gas to be pipelined in.
Right.
That's ridiculous. So yeah, we're still the biggest consumer, but pretty soon China and India, I think in a couple of years will overtake us. I mean, there's a lot of countries building. Just I think there's over 45 right now being built or scheduled to be built in the next couple of years. So that's going to be a lot of demand. So it'd be pretty interesting.
Yeah, I'm going to go back.
There's a lot of the current reactors. I think I showed it in the last video we had together. A lot of the current reactors are going to have to come back into the term market to buy, and a lot of those term contracts are based off of spot price.
So here's the overall commodities argument. The commodities are undervalued.
Right.
Started to move up, but they are severely undervalued, historically speaking. And you're looking at the change for some of these others. Copper oil.
And it's actually gone down since we made this.
This number's gone down.
Yeah.
So uranium hasn't caught up to the rest of energy complex is the point we're trying to make.
No.
Or to like gold, silver, rhodium, the precious metals. So in other words, uranium hasn't caught up to the commodities bubble, much less the increased
inflation
and increased prices we're going to see in uranium itself because of demand and because of market dynamics.
And it's being squeezed by a financial interest that has a large amount of financial interest. I mean,
here's the
there's 54
under construction in the world, 16 by China.
Who's
trying to get out of coal, by the way, because it's so dirty.
They couldn't. I mean, their air quality was terrible.
So I don't know if there's anything else from here you want to show.
Yeah, just the buyers are price insensitive. I mean, if pick a crazy number, $500, $600 uranium, it wouldn't make a big difference, right? So when you had your power outage this winter, I know some of your neighbors had, $15,000 electricity bills, right? Because they were having to run really expensive gas. If we have several $1,000s a pound uranium, not that we would, but if we had or $500 uranium, it's only going to cost people a couple extra, penny or two kilowatt hours on their bill. It's not a big deal. They wouldn't even notice. And the utilities aren't going to be bothered by it either, just because the fuel is so dense. They get so much power from such a little amount of uranium. So if the price can go up, and it must go up, I think it will go up, right? So, and I think we caught the bottom. I think this last week was the bottom. I think it's about to go up with violence.
All right, so I'm gonna have to get out of here pretty soon to go catch a flight. Sum up your thoughts on uranium, and I don't know if you want to give a recommendation or just tell people your thoughts overall.
Just get some exposure to it, even if it's with the ETF, URNM, or whatever your risk tolerance is. If you want to do your due diligence and pick some specific companies, there's some really great companies, and there's some really great advisors in the space that you could pay for, advice, and they're all worth their money for sure. I mean,
at least do your research. Don't let the market pass you by. Don't
sleep on
hand and say, I'm not going to look at them, just gold and silver or whatever.
Take
a look, because a lot of times you see these opportunities come by in the commodities complex, and it's worthwhile taking a look at and maybe getting some exposure to it.
And I think it's nice having something that's not based on, hey, we're shorting the dollar.
Exactly. It's nice to have something in the commodities complex. It's just based on supply and demand, and having a big player come in the market saying, screw this, we're tired of the whatever is causing the price suppression, we're going to free this thing up. In the middle of a gigantic commodities bull market and energy shortage.
Right.
All at the same time. I mean, that's sort of a ridiculous macro argument to make, but that's basically what we have around uranium.
I mean, there's so many tailwinds for this to push it higher. It's pretty fun. So
awesome.
good times.
Well, Thank you so much, Steve, for coming on. I know we're going to have more on this because I want to follow this as it goes along. I think that'll be the fun part, watching this thing explode over time.
Yeah.
We'll have you back on for that. And thank you so much.
Have a safe flight, man.
People loved you at the conference, by the way. So popular to have you. We
kind.
had you and Michael up on the stage as fans, and other fans appreciated that and definitely asked you guys questions. And it was just a lot of fun. We had a lot of fun with it.
It was good times. So thank you so much.
So much.
See you soon.